Vietnam Market Report for October 2024. Market movements. In October, the VN Index saw a 1.8% decline from the previous month, but it still shows a solid year-to-date gain of 11.9%. This pullback can be attributed to two main factors. Firstly, while there were positive developments, they lacked the strong momentum needed to push the index past the 1,300-point resistance level. Corporate earnings for the third quarter were generally positive, but some sectors like smaller banks, brokerages, and retail fell short of expectations. The Vietnam Manufacturing Purchasing Managers Index, or PMI, rose to 51.2, signaling a recovery from Typhoon Yagi's disruptions, but it wasn't enough to boost market sentiment. Secondly, uncertainties surrounding the upcoming U.S. elections in early November put pressure on the market. The rising U.S. dollar index weighed on the Vietnamese dong, which weakened by 2.8% over the month after a period of stability. This increased caution among investors, further limiting the market's upward momentum. Sector performance. In October, sector performance showed a mixed picture, with information technology being the only sector to post a positive gain, rising by 0.7% month-on-month. The biggest declines were seen in energy, which fell by 6.4%, utilities down by 3.2%, and real estate, which dropped by 2.8%. The energy sector faced challenges due to fluctuating global oil prices, affected by geopolitical tensions in the Middle East and record production levels in the United States. Real estate struggled with a larger drop driven by blue chip VHM amid rumors of issues surrounding its treasury share buyback plan. However, some real estate stocks performed well, supported by the new land price list in Ho Chi Minh City, which went into effect on October 31st. This list increased prices by 3 to 8 times in most locations compared to the previous one, which is expected to benefit developers with existing land banks and speed up the legal processes for upcoming projects. Macro review. For GDP growth and key sectors, industrial production increased by 7% year-over-year, with a year-to-date growth at 8.3%, while still positive. This shows a more moderate recovery, demonstrating resilience after recent economic challenges, including Typhoon Yagi. Retail sales grew by 7.1% year-over-year and 8.5% year-to-date, maintaining strong growth despite a brief slowdown in tourism due to the typhoon. This highlights ongoing strains in domestic consumption. In October, the overall Consumer Price Index, or CPI, rose by 0.3% from the previous month and 2.9% year-over-year, bringing the year-to-date CPI to 2.5%, with an average monthly CPI of 3.8%. This suggests a stable inflation environment. The core CPI increased by 0.2% month-over-month and 2.7% year-over-year, showing slight price pressure on core items, but still within stable limits. The main contributors were a 0.7% rise in transportation costs, driven by higher diesel and fuel oil prices, a 0.6% increase in food prices, marking the third consecutive month of a small CPI rise. In October, export totaled $35.59 billion, a 10.3% increase compared to last year, while imports reached $33.60 billion, up 13.8% year-over-year. This resulted in a trade surplus of $1.99 billion. Although October marked the fifth consecutive monthly surplus, it was below $2 billion due to a decline in mobile phone exports, which fell 11.9% year-over-year for the third month in a row, and a rise in machinery imports, driven by foreign direct investments, up 20% year-over-year. The year-to-date trade surplus stands at $23.31 billion, a decrease of 5.2% from last year, reflecting slow growth in traditional export sectors and a rise in imports of capital goods. In October, foreign direct investments or FDI inflows totaled $2.48 billion, a sharp drop of 55.4% compared to the same month last year. This brings the total for the year so far to $27.26 billion, a rise of 5.8% from last year. Newly registered capital fell to $1.68 billion, down 66.9% year-over-year. This brings the year-to-date total to $15.23 billion, a slight drop of 0.4% from last year. Existing capital increases reached $705 million, showing a significant rise of 283.7% compared to last year. The cumulative increase for the year so far stands at $8.35 billion, up 56.5% year-over-year. Mergers and acquisitions total $95 million, a decrease from 69.5% from the previous year. The total for the year is $3.68 billion, down 28.3% year-over-year. This decline can be attributed to high FDI levels from last October and the cautious outlook ahead of the U.S. presidential election. This bird FDI grew to $2.25 billion, an increase of 7.6% year-over-year. The total disbursed for the year is $17.99 billion, nearly unchanged from last year, down just 0.03%. In October, the Purchasing Manager Index, or PMI, bounced back to 51.2, up from 47.3 in September, signaling a return to growth. This improvement reflects a recovery in production and a more stable supply chain after Typhoon Yagi, and business outlook for the future remains positive. Market view. Over the next month, the U.S. presidential election on November 5th is expected to have a significant impact on global stock markets, including Vietnam. The uncertainty surrounding the election outcome has made investors more cautious, leading to lower market liquidity and a potential rise in volatility. Additionally, the U.S. Federal Reserve's Federal Open Market Committee meeting, which concludes on November 7, could also influence market decisions, as investors may wait for the clearer policy direction from the Fed. While third-quarter earnings results confirm the economy's recovery, the momentum isn't yet strong. However, we expect to see more growth starting in the fourth quarter and into 2025, particularly with a likely recovery in the property market. Looking ahead, market valuations appear attractive, with projections for the 2025 fiscal year's price-to-earnings ratio at 11 times, supported by expected earnings growth of 18 to 20%. That's concluded our market report for October 2024. Thank you for your support and stay tuned for upcoming updates.